names and of the market wide. Aditya Arora, founder of Adiltic.in, to talk about the technicals and the derivative position. And after a really long time, presumably for the first time on India Market Closed, Gurmeet Chadda, Managing Partner and CIO of Complete Circle Consultants. Gentlemen, both of you, thanks so much for joining in. It's been a while, Gurmeet, that we've spoken, so great having you. Aditya, good to see you on the show as well. Aditya, can I quickly start with you first, though? Just a word on the charts. I mean, they've just come off a little bit. Is the market looking skittish or are you constructive? And what are the stocks that you're recommending for this afternoon?
Very good noon to everyone. I think market structure isn't very positive if you look at the immediate short term, because the derivative data buildup which we saw yesterday was again negative, and it has been negative since last few days. So I'm not aggressively bullish on the market, but these levels offer an opportunity to accumulate stocks. Like commodity sector is doing pretty well. So I'm constructive over them, constructive on metals specifically, constructive on sugar counters. So these things are doing pretty well internationally, and those positive sentiments should trickle down over here as well. On index level, I would like to wait and watch, once again, when the momentum comes back in the market, and once we breach 22,500, then I would be pretty positive on the market on Nifty. And on Bank Nifty, I think these levels are pretty good. 47,200 at these levels, I would be bullish on Bank Nifty, keeping a stop loss at 46,800. And I would be looking at upside of 47,500 to 47,900. And the stocks which I'm looking is, I think markets are pretty volatile these days. So I would like to go with little defensive counters, which are not very sensitive, but today they are doing pretty well. First pick would be Bharti Airtel. Stock is doing pretty well today, up 5% or so. So this could be bought at 1281, 1210 would be the stop.
Okay, Aditya, I think we've got a slightly patchy line. We'll try and get that. But if we have the stock ideas, maybe we can just pull them up as well. But clearly, Airtel looks to be one stunner out there. And frankly, it seems that Telecom might be a stunner. We'll talk about Telecom in just moments from now. But Gurmeet, just an initial thought. Have you been buying recently, or are you biding your time a bit?
Niraj, on Bharti or markets in general?
No, markets in general. We'll come to Telecom in a moment. But markets in general first.
No, so I think one thing template has been clear for some time. I think it's been a buy on dips market. We have to take a view. I think our view is we are in a bull market, and bull market moves are sharp. We saw that sharp moves when stress test happened in small and mid cap space. We saw 1 day fall in small cap index by 7-8%. I think it was in November when the US 10-year crossed 5%. I think that's in the short run. That's something which could be some bit of an indicator in terms of whether you want to go a little overboard or want to keep some dry powder. Whenever the 10-year has crossed 450, I think there has been some flight of capital, mostly from risk assets, especially emerging markets, and that has led to some bit of that. So I think we are firmly in that camp. Core inflation minus food and energy is 3.8 for India. FX reserves are shaping up well. You look at PMI, all macro indicators are solid leaders. I think we are the only market which got an EPS upgrade last year. So I think this geopolitical uncertainty, I think sometimes it's just better to wait it out. So for now, I think we are saying not doing anything is the best thing to do. And if the market will give some indication in form of some downward pressure in the yields on the 10-year, on the gold prices, etc., that's when you get a more formal view in terms of whether to add more in this decline or not.
Yeah. Good afternoon, Gurmeet. Tamanna here. I was just curious what your theory is for what caused the mid-market dip today. Was it a geopolitical statement? And how heavy are these kind of statements or saber rattling going to hang on this market?
See, I think it's a combination of today being Thursday and some statement coming from the Israel finance minister. I think my personal view is there could be some horizontal escalation, knowing kind of response Israel has had so far on this, and this could lead to some bit of spike in oil prices and some turbulence here and there, and that's why the market is a little bit nervous. But I don't think so. It has the potential of that theory of stretching into World War III. I think it looks a little overdone to me. But as I said, sometimes it's just better to wait it out. And anything where India falls for non-India reasons in the past has been a great opportunity, whether it's been Russia-Ukraine war, Israel-Hamas conflict, you can go on for last 10 years. Whenever it's been for non-India reason, I think the key thing here is that you be in a portfolio which has earnings growth. I think that's your biggest hedge in the market. Get into stocks which have good momentum, good growth. I think that should help you well once these things settle.
That's a good point and a great quote as well. Whenever there is a fall in the Indian markets for a non-India reason, it becomes a great opportunity. Another opportunity which could present itself for investors is the Vodafone FPO. Is it truly an opportunity or not? Smriti has broken it all down, all the pros and cons. Smriti, what conclusion are you coming to?
Well, I'm going to give you the positives and negatives on that one, but let me start off with the key numbers here. Now, this is an 18,000 crore FPO, which is the biggest FPO till date. Now, out of this 18,000 crores, the anchor raise was about 5,400 crore, which hits the upper limit of 30%. That's what anchors, that's the limit that anchors can put in the money. Now, the price range for the FPO is 10 to 11 rupees, and the anchor bids were at the higher end at 11 rupees. Promoters have also infused some capital of about 2,075 crore. This was even higher. So it was at 14.83 rupees. Now, if you look at some of the positives that come out of it, within the anchor raise, we saw some marquee names like GQG putting in the money. And GQG was one of the biggest investor into the anchor, among the anchor investors as well. It invested about 1,348 crores and was given about 25% of the total anchor raise. Then we saw some other names like Fidelity Funds come in with 774 crores. They've put in that. Red Wheel Funds about 281 crores. So big names there. So that seems to kind of show the confidence in the company. And we also saw some domestic funds like HDFC, Motilal, BNP Paribas, 361 funds come in and put in money, and the domestic was about 16% of the total anchor raise. But let's talk about how they're going to use these FPO proceeds. Now, they plan to put money into 5G, to roll out 5G, and the company has a target of covering 40% of their total subscribers in the next 2 years itself. They also plan to expand 4G services. So that's pretty much the plan for using these proceeds. Now, another positive for this is government support to this FPO. Government has come out, including the finance secretary, who's come out and said that they support this fundraising. So that's another positive, that the government is not going to let this telecom major die. So that's another positive into that. And you also look at some street expectations. They're giving revenue expectations to their investors that they're going to raise from 40,000 crores to 75,000 crores in the next 2 years itself. They plan to migrate 2G customers to 4G. Now remember, they have 43% of their subscriber base is 2G. So big opportunity there, the conversion to 4G. They also expect tariff hikes in the next 2 years itself. And we're looking at 20 to 25% of tariff hikes. However, there are some downside risks as well. The gross loan for the company stands at about over 2 lakh crore rather, and 90% of that is owed to the government. Now, these payments will become due post FY26. So in the second half of FY26, they'll be liable to pay about 30,000 crore, out of which 28,000 crore will be towards the government. However, the company has time and again said that they may utilize a relief package, which is essentially converting government dues into equity. So that's the option that they have been talking about pretty much a lot. Now, so that may play a major role in dilution of equity. We're anyway going to see about 26% dilution post this 20,000 crore fundraise. So that's another downside to this as well. And the last but not being the least, they have lost 5.6 crore subscribers since Jan of 2021. So to bring that sort of subscribers back into the company, especially when you're also hiking tariffs, now I understand that will be across the industry, but that's something that we'll watch out for.
Okay. Smriti, thanks a lot for that. So that's the pros and cons of Vodafone. By the way, keep an eye out for the market as well, and we'll get to that. But since we're on the topic of Telecom and Vodafone, Gurmeet, would you be tempted to put in money into Vodafone? And what's happening with Bharti as well? It's been on a roll today. There is also some very strong traction seen in Indus Towers.
I think Bharti has been on a roll for last almost 2 years now. I think I remember it getting stuck in a range for a while. And I made this discussion when we used to interact that you can't have Jio at more than 100 billion valuation. Now, obviously, Jio platform is around close to $150 billion valuation, and Bharti being 50 billion. Today, I think crossed ICICI Bank's market cap, if I'm not wrong. And great additions on 4G and 5G. I think on a quarter-on-quarter basis, they've been adding 6 to 7 million on 4G, 5G. Industry-leading ARPU. The digital portfolio seems to be doing well. The home broadband business doing well, and some stability even in the Africa business. I always believed that Bharti was slow on payment banks and digital. It could have done much better with the guide. It was the first to get that license. I think I see more value unlocking there. Bit of a rub-off from the Bharti Hexacom, its subsidiary IPO as well, which got a very good response. My sense is this, it will eventually become a 2.5 pair. It's already a 2.5 pair. Vodafone Idea, probably in my view, I'm a little concerned on equity dilution. If government converts the dues to equity, it will almost be 80% kind of holding for government, and 18,000 crore isn't much. It will be used to first enhance 4G sites and then get to 5G sites. So there's already a gap. And post-merger, Niraj, if I'm not wrong, they've lost 19-20% market share. They had almost more than 42, 43 crore subscribers, if I'm not wrong. It's down to about 22. So I don't know. I'm not too sure. In fact, last 2-3 years, a lot of people have wasted their time on analyzing too much on Voda, Yes Bank, Z, etc., and probably have missed the entire bull market.
Okay, fair point. We'll take the views from Aditya on the other side of the break because we really need to slip into one. Aditya, just stay on because we'd love to come and talk about the markets with you a bit because the markets have taken a turn for the worse, by the way. Before we take that break, just look at what the indices are doing. Bank Nifty in particular, but the mid-cap index too has slipped into the red, and there is a bit of a pullback in the Nifty 50 from those levels at the lowest point of the day currently. Quick break, we'll be back with more in just moments from now.
We are joining NDTV's Pledge to Vote initiative. I pledge to vote and also encourage all of my colleagues to exercise their voting rights. Election is the largest celebration of democracy, and we fully support it.
Welcome back. Now, markets have taken a turn for the worse. Where and when exactly has this statement come needs to be seen. Is that what is spooking the markets? A statement doing the rounds of the Israeli finance minister saying that we will retaliate in a way that Tehran rocks. Now, remember, the expectation of the market is that whatever had to happen is done because of the 300 missiles that Iran rained down on Israel. One got through, 99% just did not, and there were no fatalities. So the expectation was that there won't really be too much of a tit for tat going on and escalation. the fear is that that's not necessarily going to be the case. That's why you look at the intraday chart of the Nifty and the drop over there. Meanwhile, among the top losers, of course, is Nestle, but for other reasons, their sugar shock is what is spooking the market today. Aditya Arora with us, so is Gurmeet Chadda. Aditya, I'm going to come to you, on your top picks first, because I think you started talking about Bharti Airtel and then you froze. So I want you to complete your top picks and then give me your take on a Nestle and a Just Dial.
Sure. So my first bullish bet would be Bharti Airtel. I see a fresh rally starting over there. Second would be 361. That stock looks pretty good and it's showing good relative strength, wherein other pairs are just falling apart and market is seeing good correction. So this stock really stands out. So one could buy this stock at 796, 746 would be the stop loss, and 900 to 1100 would be the target. And the third one is Jio Finance. After this news that they are entering broking business, stock is showing good strength. So this could be again bought at 380, 350 would be the stop loss, and 420 to 439 would be the target.
So Jio Financials is the other one on Aditya's list. What about a Just Dial? What would you do with a Just Dial today, Aditya?
I think there are times when Just Dial simply rallies away and it shows high beta moves. And we have seen this many times in the past. When a fresh rally starts in Just Dial, it just doesn't fizzle out in one day and it continues for some days. So my view is in tandem with that. I think Just Dial could be bought at current market price of 1016. Stop loss must be 920 and target would be 1100 to 1150.
50 is the upside that you see on a Just Dial. They've reported, of course, a healthy set of numbers. The stock has surged over 12, now 14%. We spoke earlier in the day to their CFO Abhishek Bansal on their traffic breakup and growth targets for the upcoming quarters. Listen in.
So traffic-wise, incremental traffic largely is coming on mobile platforms, which now form about 85% of our overall traffic. So it's this 85% maybe could go to another couple of percentage points higher, but growth is being driven largely by mobile platforms. So while we don't issue any formal guidance, but as a business endeavor is to grow top line at 15% plus growth rates, which again should materialize from a mix of both volume additions as well as ticket size growth. For example, Q4, we had about 8.5% growth in campaigns on a year-on-year basis, another 7.5% in our realizations. On margins front, we exited the year at about 26%. And for next full year, we are targeting that we should comfortably be 25% plus. There is obviously scope for margin expansion as well, since there is inherent operating leverage that exists in the business for top line growth anyway beyond 8-9%.
Gurmeet, did you get a chance to look at the results and hear the commentary of Just Dial? I mean, the cash on the books is there, the growth numbers, 10-15%, whatever they do, at a 7,500-8,000 crore or whatever it is the market cap is it attractive a proposition?
Niraj, this business, which is B2B essentially, and a platform business has multiple variables. And Just Dial obviously has had a change of promoter. It's been good numbers, must admit. We also track India Mart, not exactly strictly comparable, but we do that. We believe that can you hear me? There's some.
Sorry. Okay, I think we've just. It's an unusual day when we are seeing these glitches keep on coming.
While we talk about how well telecom stocks are doing.
Think about it.
Connectivity.
It's just quite funny. But Just Dial certainly done well, and Aditya has already given his view, but pretty interesting as to what's happening to that stock. The other one really that the team of stocks which stand out today are these real estate names, right? Just the kind of moves that some of them have done after their monthly sales or the quarterly sales numbers are out, and TARC or a Brigade Enterprises, the two of them in particular, maybe even a Suntech Realty, I think they've just done so well today. It's quite exceptional. Aditya, did you get a chance to look at the charts of a Brigade or a TARC or a Suntech Realty?
Yeah, absolutely. I'm checking the charts of these counters. Among these, I think Suntec looks pretty good. So I have a bullish view on this counter. I think this could be bought at 437.95. One must maintain stop loss of 410 and target would be 470 to 490. And second one you talked about was Oberoi Reality.
No, I asked about Brigade Enterprises.
Right. I think Brigade looks, it's trading in little bit of overbought zone, and over here the stock is facing little hurdle at 1050 level. Until and unless 1050 levels are not taken out, 1050 to 1055, these kinds of level are not taken out, stock would probably face some tough time to make new high. Once 1055 is taken out, then we could maintain the bullish bias. Otherwise, I would stay neutral at 1036.
Okay. Stay neutral otherwise. TARC is also done well, so watch out for those. In fact, speaking of Brigade, well, it soared 6% though, and we had a chance earlier in the day to speak to Joint MD Nirupa Shankar on rising realizations and where the consumer appetite lies. Listen in.
I think the market as a whole has been very good in terms of the consumer buoyancy and the consumer appetite for completed assets and new launches. So we've been able to increase our prices by almost 20% in the last year or so, just because the appetite is there and the demand is there. It is primarily end user driven. And there is demand for all sorts of real estate asset classes, whether it's plotted, whether it's mid-income, whether it's high-end apartments. I feel that any launch by a reputed developer with a good location, a good plan is able to sell well, and we've been able to make good of that market situation as well. Even high-end villas that I would say prior to COVID were pretty hard to sell. There were a very small percentage of people that would actually buy these high-end villas. But right now, even the high-end segment is doing extremely well. The average ticket size in Bangalore, I would say prior to COVID, used to be around 60 to 80 lakhs, maybe pushing up to even 1 CR. But I think now we're seeing the sweet spot for the Bangalore real estate market actually going much higher to at least 1.5 to 1.7.
And well, just before we take that break, though, there are some news flashes on your screen. Nestle has come out. We spoke about this in the morning, that the market will make people realize about what's happened here. There are a lot of angry parents out there, angry consumers out there, and as they should be, but Nestle is saying their infant cereal products are manufactured to ensure appropriate nutritional quality. If I'm not wrong, I read that. We never compromise and will never compromise on the nutritional quality of our products. Well, compliance is an essential characteristic, sure. So all of this notwithstanding, Tamanna, it's an issue that is larger, and it's not just about just basic nutritional quality in a product, absent or not, but also what is present versus what is present across the world.
So that is the issue, and you're right, it's bigger than just Nestle in India. It is Nestle in other parts of the country. The question is also for our own agencies and FSSAI, the ministries, what are they allowing? Essentially, a Swiss agency found a survey that the content of sugar in Nestle baby products in India, in Africa and Latin America is much higher than in European and American geographies. In fact, in India, it's about 3 grams for a 30-gram serving, so that's nearly 10%. And this is really, really bad for kids, and these are small babies. Sugar can cause diabetes, obesity, a whole host of issues. And this is why you've seen that stock also respond quite badly today. Nestle India now putting out a statement saying that this is appropriate, etc. It's by the rules, and reduction of added sugar is a priority for Nestle India. But what was happening so far? How long has this been going on? Additionally, like I was mentioning, they have 98% share. So there's nowhere else to go. And for very small infants who cannot have mother's milk, there is nothing else to have except formula. So it's not as if you have a lot of option either. It makes it even a bigger concern.
Yeah. Well, the market's verdict out there, quite frankly. Sure, what we'll do is we'll take a break on this note and digest this piece of news. In fact, get in a fundamental guest to come in and talk about this as well as talk about this with Aditya. Gurmeet, take a moment to thank you, of course, for joining in today. Stay tuned, viewers. Also, some derivative updates, maybe on Nestle as well, and some top BTST ideas. Stay tuned.
All right, markets wobbling a bit over the last few minutes. Let's quickly just pull up the intraday and the Nifty contributors to give you a sense of where that pain is coming in. Markets almost at their day's low, just 10 points off their day's low right now. And really, you've seen an HDFC Bank weighing heavy there, being balanced to some extent by a Bharti, which is having a great day. Otherwise, it would have been worse. So your banking pack not doing too well. Your HDFC, Axis, ICICI Bank, all of them in a bit of pain. Agam is there with us today. Nifty expiry day. Agam, and a bit of an afternoon shocker and volatile swings. Did you see those trends play out?
Tamanna, I believe that a lot of traders out there who had sold puts or perhaps were long futures are stuck in their positions at the moment, especially those who are trending in options. At one point in time, when the Nifty dropped well, your options worth 5 points and 10 points went all the way to 150 to 200 points. So you can imagine the kind of carnage that has caused when it comes to those option sellers on the put side of things. Now, a lot of them are trapped at the moment, unfortunately, and at least as far as the expiry is concerned at the moment, we are seeing them unable to come out, and which is why we saw that selling pressure will further exacerbate over the last 15-20 odd minutes as we move towards closer to expiry. That said, we have seen about another 5% increase in open interest as far as the Nifty futures are concerned. And the Bank Nifty, again, we're looking at a knock of another 1%. Well, it will come and sit at a base of 47,000 as we move into trade tomorrow. That's where your next level of support is as far as the Bank Nifty is concerned. In terms of options, and this is what I was talking about. Earlier on the session, we saw the Nifty move higher to around 21,100, 21,200. That is where we had seen a lot of writing around 22,100 and 22,200 puts. But that has changed substantially over the last 2 hours of trade. I just want to take a look at, so this is your overall open interest distribution. That has changed substantially. Let's move on and talk about your overall open interest distribution. At the moment now, we may be seeing a lot more traction around 22,000, and we have lost out on that mark. And there are still a lot of put sellers just sitting and perhaps hoping that there could be a recovery over 22,000. It's going to be very, very unlikely that we're going to see the Nifty close above 22,000 in today's day of trade. And I reckon this must have also forced out a lot of hands for those who, as I mentioned, who may have written certain puts at a premium of anywhere between 10 points to 50 points, and they were forced out at, maybe 2 times, 3 times the option premiums they were hoping to make in today's day of trade. Which is why expiry trading is always a very, very dangerous game, and you have to know what you're doing. Let's talk about stocks then. And in terms of stocks, of course, we're looking at shorts, which would include something like an Exide, where we're actually seeing a little bit of a reversal there. IGR, Dr. Reddy's, Apollo Hospitals, and among stocks which are seeing unwinding. Again, about a short covering for Vodafone and RBL Bank, but other than that, we're seeing some weakness in Tata Communications and Escorts as well. While today's focus was meant to be on the stocks, it does seem like the Nifty's taken over, and the volatility has certainly claimed victims today.
Absolutely. The Nifty now under the 22,000 mark and dipping lower as we speak. So definitely a lot of pain points there. Sudeep Bandyopadhyay now joins the conversation. He is Group Chairman, IndiTrade Capital. Sudeep, good afternoon to you, and thank you for speaking with us today. What do you reckon is spooking the markets right now, and would you wait for things to settle, or do you see opportunities to buy into these drops?
Well, I think what is spooking the market is, of course, the weekly expiry. A lot of positions are there on multiple sides, and I think that's leading to all this volatility in the last hour. As far as taking positions is concerned, if somebody is wanting to accumulate good quality stocks for long term, of course, this is an opportunity. Also, but I will always advise that don't buy whatever you want to buy at one shot. Buy something today and maybe wait, and let's see what happens in market opens tomorrow.
Let's just pull up very quickly what is working on the markets today. And it's a day of telecom. We've been speaking about Bharti Airtel doing very well. What's not working, on the other hand, is a Nestle and healthcare. I would say the healthcare pack also seeing a lot of pain. I'm just going to come to the story on Nestle for a second and then get in views of our analysts of what to do with that stock. So there are two parts of it. One is how the stock has dropped off, about nearly 4% as we speak. One analyst on our channel today thought it's a buying opportunity. But what really is happening, and why is Nestle taking a beating? Sesha Sen has all the details.
If you are a parent and have a kid at home, you will be shocked to know what I'm going to tell you now. A new study by Swiss investigative organization Public Eye has revealed that Nestle, which is the world's largest food company, uses excess sugar in its baby food products in India and other developing nations. Nestle uses 3 grams of sugar in every serving of Cerelac sold in the country. I'll ask my camera person to show you the label of Cerelac. So if you look at the label, Nestle says that it uses 9.1 grams of added sugar per 100 grams of Cerelac. This essentially means that the company uses 10% of its sugar in about 25 to 30 grams of Cerelac. Now, what is even more shocking is that in developed markets like Europe, there is no such added sugar that is used in their products. This raises 2 serious questions. One, is Nestle putting children's health at risk in a country where several studies have indicated an alarming rise in obesity among children? And the second, are there any guidelines or a law that checks promotion of such products in the country?
So that is the essential story of why Nestle is under pain. Nestle has put out a statement a short while ago, and we put that out on our screen. But just to reiterate, they've said that the cereals are fine, they're working towards reducing sugar, etc. Now the question is, should you buy Nestle stock on dips at this point? Listen into what Rahul Arora of Nirmal Bang has to say. It's quite a contra view.
You'd remember when the Maggi crisis happened, the way Nestle was able to go back to the drawing board and not only reinvent itself, but come back with greater market shares and the kind of numbers it has delivered since then, it had not delivered pre the Maggi crisis. In the West, if you look at Coca-Cola, for example, they actually have adverts on their television telling people not to consume Coca-Cola, for example, because of the amount of sugar that they have, but they leave it in the hands of the consumer. But should Nestle be required to take corrective actions? And by no means am I justifying, the findings of this report. Of course, coupled with the fact that royalty increases were also announced recently. But I think if any remedial actions are to be taken, I think Nestle is more than capable of taking it. I think it's a household name. And I think any dips into this stock should be bought into. I mean, it's 100% plus return on equity, capital employed, return on invested capital business. It's growing its earnings by 15%. Any such opportunities, I think, while unfortunate, could potentially present themselves as buying opportunities.
Yeah, is this a buying opportunity? Sudeep, I'm keen to know your view.
Unfortunately, yes. I mean, there's a moral hazard and the entire, discussion around this unfair treatment for, the product as far as India and other poorer nations are concerned. So obviously it's unfair and probably not warranted. But as far as the market is concerned, I think what Rahul mentioned is absolutely correct. And I was going to say the same thing, that we have seen this happening during the Maggi controversy, how, robustly Nestle came back and delivered post that controversy. I'm reasonably confident that Nestle will do the same this time as well. So, if you're an investor who have, let's say, 1 year plus time horizon, this is a great time to buy Nestle because, this is where the price is getting corrected. Maybe there'll be a little more correction. And this is the opportunity to buy Nestle.
So while we're telling you about, what the story is, the response, central government is going to be looking into it. That's another part of the story, and that, of course, will continue. But in terms of an investment opportunity, Nestle looks good, says Sudeep Bandyopadhyay as well. Aditya, what's your view?
So looking at the charts, I believe that Nestle, look, I would prefer the stock to give a breakout first, because in such scenarios, any negative news could give another gap down on the stock. So in such kind of scenarios, I would prefer a breakout. I would prefer to buy higher, but I want a confirmed entry wherein, post entry, it can give a short-term good move on the upside. In that kind of scenario, I would prefer an entry above 2650. Post that, I feel that Nestle could again take out its previous swing high that are placed at 2760, 2780. I think once the stock crosses 2650, we can go towards these levels of 2750, 2800.
All right. Now, while that's the story with Nestle, the fact is that market is looking wobbly and a bit spooked, frankly. Bank Nifty is the one showing the greatest amount of pain. among the sectoral indices. In fact, let's pull up the sectoral indices and look at the sharp drop in the Bank Nifty just in the last few minutes or so. And there you have it. Yeah, PSEs doing badly. Coal India today is particularly hurting. FMCG probably being dragged down by Nestle, etc. But you've also seen the Bank Nifty and heavyweights there in a bit of pain. Axis, like I mentioned, Axis, ICICI, IndusInd among them seeing the biggest knock. Sudeep, in terms of numbers coming up, and that's the big trigger, apart from what's happening geopolitically, globally, numbers are the big trigger. Let's talk a bit about Infosys and Bajaj Auto. Numbers expected after market close in both cases, or maybe in the next 15 minutes. I don't know if you'll see the first hit of Infosys numbers, but at least Bajaj Auto after market close. How would you position yourself on some of these counters, and is there a Q4 numbers kind of play that you have in mind? What would you be looking out for?
Well, as far as IT is concerned, our view has been that it will be a mixed bag, and that's been proven right. If you look at the TCS numbers which they came up with, it was a good set of numbers that did beat the market expectations. Exit margin of 26% was very good. And management also very clearly communicated that FY25 is going to be better than FY24. So I think all this, they're ticking the right boxes. The only problem were in two counts. One, North America. Second, BFSI. Now, these are important areas. North America hasn't done well and BFSI hasn't done well. So these were the niggling worries in TCS results. And I think these are going to show up again in Infosys numbers which come out later today. And now one has to see how Infosys has managed to cover those dips, North America and BFSI, through other geographies and other verticals. Now, TCS did that very well and increase margins. Will Infosys be able to do that? I think the answer, as far as market is concerned, is no. Infosys will not be able to do that, and that's why we have seen sharp correction in Infosys over the last many days now. And our feeling also is Infosys numbers will not be anything great to write home about. But let's see, wait and watch. As far as Bajaj Auto is concerned, we expect a good set of numbers. Domestic, they have been doing reasonably well for quite some time now. And the niche which they have picked up is the mid-market, not the top end, absolute top end, not the absolute bottom end, the mid-market. And that's where they're growing and they're gaining market share on a continuous basis. As far as exports are concerned, they were suffering for quite some time, but I think things have changed and things have picked up. I think, monthly, the numbers which the company comes up with very clearly shows that. The buyback and everything else has also created an excitement around this stock. It had gone up and now corrected, but again it has started moving up. And we believe Bajaj Auto numbers will be good and they will support the price where it is.
Yeah, Bajaj Auto also a lot of buzz about their CNG bike launch in June. And, at least that's one stock which has done particularly well, 114% up in the last 12 months, holding up even on a otherwise pretty tough day. Now, we were talking about Infosys and they're set to release their numbers in just a bit from now. Rucha is joining in with a quick preview of what you can expect.
Yeah, so Infosys is set to report its result post-market today. Revenue is expected to have a negative growth, while EBIT and PAT are largely expected to remain flat. The guidance is expected at 3 to 5% for the revenue in constant currency terms, while EBIT margin guidance is expected at 20 to 22%. While EBIT will be impacted by 1 month of wage hike, there were no large deal wins announced by the company in the fourth quarter. There are 3 key things to watch. Number 1, the guidance for revenue as well as EBIT margin. Number 2, what is the deal wins pipeline, and as said for TCS, are they getting converted into revenue or not? Number 3, commentary on the demand environment, and are the clients incorporating more of discretionary spends, or are they still skeptical about the same?
All right, so that's what you need to watch out for as far as Infosys is concerned, and obviously you'll see the quickest updates and analysis right here. Aditya, I just wanted to know your take on an Infosys and Bajaj Auto on the charts.
Sure. I think Bajaj Auto looks very fantastic on the chart, and it already had a stellar run since levels of almost 4,000-5,000, and it has touched levels of 9,000. I think this stock has more to go. I think I would say that more outperformance is likely over here. So I would say that bullish bias is still maintained on this counter, and probably it can again reach new highs, which are placed at 9,300, 9,350. So I would maintain my bullish view over here. And when it comes to Infosys, I would again maintain bullish view over here, because the difference between Nasdaq and Nifty IT is so big that any reversal over here could trigger a very good rally in a lot of IT counters. And we know that Infosys and TCS are heavyweights in Nifty IT pack. So I would maintain my bullish bias on Infosys at levels of 1420, and I think one could accumulate the stock in these levels, because when the results would be announced, we can see some volatility, and my upside target would be 1530 to 1600, and I would place my one-day closing basis stop loss at 1370.
Okay. 1370 is the stop loss that Aditya would give for an Infosys, and he's bullish actually on both, awaiting those numbers shortly. Meanwhile, another space that has not been doing too badly is your upstream oil companies, and Mihika is joining us now for an overview on this set amidst crude windfall tax, which has been raised. Yes, Mehika.
Yes, so Brent prices are up 19.5% year to date due to tight global supply and geopolitical tensions. And the Indian crude basket price has also surged 17% year to date at $90.46 per barrel in April. Now, higher oil prices is potentially very positive for the upstream companies like ONGC and Oil India. But however, the windfall taxes levied by the government limit the kind of potential that they do have. Now, the windfall tax was raised to 9,600 per ton 2 days ago, which is 4 times the January rate. But there seems to be a somewhat cushioning mechanism. So when you look at the realizations per barrel, which is derived from subtracting the windfall tax from the Indian crude basket price, the realizations right now stand at $77.29 per barrel, which is higher than any of the previous 3 months of 2024, where the average crude basket price was actually lower than what it is right now. And when you compare it to the historical time periods as well, the monthly crude price baskets in the $90 range. For instance, in October 2023, the crude basket was at 90.08 per barrels with windfall taxes of 14.57 per barrel, but realizations was 75.51 per barrel, which is lower than what we are right now, despite having an average crude price standing higher. Now, this suggests that the tax policy could have a possible cushioning mechanisms for the upstream companies, where despite the higher crude prices and the higher windfall taxes, the realizations allowed, which is technically the profit margin that the company could have for itself, stands higher than the historical prices.
All right. You were saying a lot of those stocks come off their day's highs, like many of components of the market. I just want to see what BPCL, HPCL is doing. HPCL was having a particularly good day at the start of trade, and yeah, most of them have come off their highs. HPCL still pretty decent, up in the red, up in the green, up 2% really. Aditya, anything you're tracking in this space and you like?
Yeah, I think I would talk about Hind Petro itself, because that's an outperformer. The stock is, trading in a range, but once the market stabilize, probably there is more upside. We saw good upside in ONGC in last few days. I think HPCL could follow, but we would have a level-based approach in this counter. We'll be bullish in this counter once 495 is taken out. That would be the buy level. Stop loss would be 470, and target would be 515 to 525 would be the target.
Okay. Sudeep, your take on Hindustan Petroleum?
Of course, it's a good stock, good management. The only challenge is, elections are happening all around us. And, in this season, it's very unpredictable. That's what I would say, because the government will not facilitate or encourage a price rise in the bunk. And if the oil price starts shooting up, I think the challenge becomes acute, and the HPCL, BPCL marketing companies will have to definitely bear a share of the loss, which they will then start accumulating in their books, and things will start going south. Under the circumstances, my recommendation has been that let this election period be over. Only then get into these marketing companies.
Absolutely. Now, talking about elections, and of course, the first set of votes will be cast tomorrow. Phase 1 begins tomorrow. In fact, a little later on at 3:30, we will be bringing you a special show on why Phase 1 is important. But meanwhile, we have been consistently telling you how rich your candidate is. And the spotlight today is on Tejasvi Surya, who's contesting from Bangalore South seat. Alex has all the details.
Absolutely. Well, it's interesting. This young candidate has bet on equity in a big way, and you'll see why. Let's first look at the total gross total value of his assets. It currently stands at about 4.1 crore rupees, and it's roughly gone up as much as 4 times over the last 5 years, and quite a bit of that has to do with his equity investments. He's got fixed deposits of about 5.45 lakh rupees. That's actually reduced from 8.76 lakh rupees in 2019. He's got movable assets of over 4 crore. His taxable income in FY23 stood at as much as 44.13 lakh, and that's also a very substantial jump from 5 years before that, when it stood at about 5.13 lakh rupees. He had no mutual fund investments back in 2019, but then as of now, he's got as many as 26 mutual fund schemes, and that's perhaps a little too many. Having said that, he's got close to 2 crore invested currently in these schemes, and the biggest holdings are in small cap funds. So you'll see the likes of Kotak small cap, as well as ICICI Prudential small cap, and the Tata small cap fund in the list of mutual fund schemes that he has. He's got cash of 80,000. That's more or less stayed constant over the last 5 years. Doesn't believe perhaps in holding too much cash. And he's got investments in listed stocks, which again, he did not have in 2019. And some of them include the likes of Dredging Corp, as well as BSE, which has done incredibly well, Everready, Indus Towers, Jagsanpal Pharma, as well as Network 18, Strides Pharma, and Tejas Network.
All right, so quite a portfolio there, and Tejasvi has bet on equity. It's worked out well, at least for him. So thank you for that, Alex. And remember, this is a series that we're putting out regularly on NDTV Profit. We're giving you every aspect of the selection, but a little hatke. Not just what you'll probably see on every other channel. Now, having said that, just a couple of minutes for close. And Aditya, any, sort of BTST ideas?
Sure. My BTST idea would be on Bank Nifty. I would also say a disclaimer that we have advised this recommendation to our clients. So we are bullish on Bank Nifty. Currently, Bank Nifty is trading at 47,100. Stop loss must be placed at 46,700, and target would be 47,500 to 48,000. So we are playing a mean reversal, trend reversal trade in Bank Nifty.
Right, so Bank Nifty is the BTST trade that Aditya has. He sees a reversal coming in there. Thank you so much, Sudeep and Aditya, for speaking with us today. Just a couple of minutes to go for what is looking like a bit of a painful close for the markets today. It started off fairly okay, frankly, contrary to what expectations were. It seems there was a statement around 1:30, 1:45 India time from a government official, the finance minister, who's being quoted in Israel, saying that the retaliation to the Iranian missiles is going to be very harsh. That seems to have spooked the market. The Bank Nifty down 3/4 of a percentage point towards the end of it. I'm just going to pull up the sectoral indices before we go to the Nifty components and heat map, etc., because I want to give you a sense of what really has hurt today. And FMCG right on top of that list, probably more than just a Nestle, though Nestle was the big one. Finance, Nifty Finance, Fin Nifty, Bank Nifty, all of them really seeing some pain. The only thing working perhaps to some extent were media stocks, but very little weightage. Let's pull up Nifty constituents as well, the heat map first to go with, and look at what's happening there. Markets have shut there. Apollo Hospitals and Nestle there at the bottom. The entire consumer space actually, look at a Titan also down 3%. So between these three, you're seeing a lot of pain. But what has really dragged down the markets today is an Axis Bank, a Coal India, counters like those which have seen a fair bit of pain today. Banks overall not doing well at all. And ICICI and HDFC Bank down 1% as well. On the upside though, Bharti has had a fabulous day, and it's the entire telecom pack. Is it something about a Vodafone possible revival, which is a bigger threat to a Jio than a Bharti? I don't know. That could be one of the theories, but that stock up 4%. Bajaj Auto ahead of its results. Its Q4 numbers expected in a bit from now, doing exceedingly well. So is Infosys. Bajaj Auto has anyway been on a good run. Power Grid for a variety of reasons, but they're also raising funds, up about 2.5% at the end of it. I just want to pull up what the broader markets look like before we wrap up our summary for the day. And while you saw quite a bit of pain on the Nifty and Sensex, it was not too bad on the end of the broader markets. The Nifty mid cap, of course, in the red, but mildly, the small cap, in fact, mildly up in the green. Just pull up the BSE top gainers, BSE 500 top gainers if you can, to give a sense of what was working. And you had a Just Style there right on top. Q4 numbers is the reason for that. Mastech is another interesting one. They have a deal with the UK Defence Ministry, and that saw a huge upsurge in that stock in the second half of the day. So they were doing well. News flow coming in a jubilant Farmova as well. So these were some of the counters there. Spark, again, a tough day for that counter. So all in all, a wobbly end to an okay start. We'll have to wait and see how things develop overnight. In the morning, we will also have cues from an Infosys, Bajaj Auto, and a lot more. So stay tuned for all of that tomorrow on India Market Open. But for now, from me and the team that has put this show together, thank you so much for watching. We'll take a very short break, but we'll be right back. Stay with NDTV Profit.
Hi, I'm Rohit Kapoor. I'm the CEO of Food Marketplace at Swiggy. At Swiggy, we are in the business of offering our consumers a wide choice, convenience, and a multitude of options to choose from. Voting is something similar. It's about exercising your choice, exercising it responsibly, thoughtfully, after going through all the options that you have. So I will encourage all the employees at Swiggy, all our delivery partners, everyone at large, their families, and all of us, all consumers, to come out, and those who are eligible, vote and exercise your choice and make India always a better place than it was yesterday, because we all owe it to the nation and to ourselves. Thank you.
हाँ बट तुमको चलाना पड़ेगा. All right, polling begins for the 2024 general elections on the 19th of April, that is Friday. Today we're talking about why Phase 1 matters, and it's the beginning of our special coverage of elections on NDTV Profit. Now, why Phase 1 is important is, of course, it's 8 union ministers, 2 former chief ministers, 1 former governor, and a whole host of heavyweights that are going to be in the fray from all the political parties. In fact, you're going to see about 19% of all seats will see votes cast in Phase 1. So it's a sizable number of seats as well, which are up for the test. It's important for the DMK and the India Alliance. All of Tamil Nadu's 39 seats go to vote tomorrow. On the 19th of April, so it's important for DMK and what the India Alliance can do. It's important for the BJP that has been hoping to make significant inroads into Tamil Nadu, and you can see that from the number of times that the Prime Minister has been there as well. Remember, there are key seats in Western UP that will also go to the polls, and that's one to watch out for. And of course, the BJP is aiming to win all 5 seats in Uttarakhand for a 3rd time once again. So for a variety of reasons, this is an important phase for the elections. Now, what should you watch out for? We have some of the best numbers guys, I would say, the pollsters who really track the numbers. They're not just talking about mood in the air. They have the data to back what they say, and which is why I'm glad to welcome on the show today Yashwant Deshmukh. He's director and founding editor of C Voter. Sanjay Kumar, professor of CSDS, is with us on the show, as is Amitabh Tiwari, political strategist. Welcome to all of you, and thank you so much for speaking to us on this special show today. Yashwant, let me begin with your take on Phase 1. We're kicking off a mega election. Now, for the longest time, at least, you know, when I speak to people in the markets and covering what the mood is, everyone seems to have discounted this election. There's no real buzz. Will we see that buzz beginning from tomorrow, and why is Phase 1 important?
Well, I think because everybody's thinking about the bigger picture, the possible overall result, and that's why we feel like there's not enough buzz. But there are very, very keen contests that are going on, and for different reasons, they are very important to observe. For example, Tamil Nadu itself is so critical at this point of time to observe and understand, because if you are looking at Tamil Nadu from a perspective that, okay, is India Alliance under the leadership of DMK in Tamil Nadu is winning or not, and if NDA can even open an account, I think obviously you will not feel like any buzz, because there is hardly anything worth buzzing from that perspective. But if I tell you that the contest is not between DMK and